Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in with the markets today. So the bounce did not last as long as we thought it would. I was looking for a gap fill ideally to get at least a second or third day of this bounce, but really the bears all over it. And what that is just a testament to their strength with their ability to crush down that bounce so quickly. So it's a potential bear flag at this point. And if you draw the steep downtrend here, this pullback the last couple of weeks, that's the flagpole. And then you could draw your parallel support and resistance here. So the lower Bollinger Band has held as support the last 2 days. The bulls are closing above that level, so we'll continue to keep an eye on that. But at this point, we're looking at 258.84 and 257.83, the low of the last 2 days. And really a lot of opportunity in both directions today. Obviously, the big gains went to the bears, but that doesn't mean that there weren't some bounces. And I personally played SPXL and SPSX in both directions. And really, again, this volatility is exactly what day traders are looking for. And we'll see what tomorrow brings in terms of opportunity. But if we see bearish continuation after 257.83, it's the 200-day moving average and then the low of the February dump. So there are a couple support levels left. Obviously, the weekly time frame showing a lot more weakness these days. And if we do see this bear break of 251.91, we are going to be looking at a significant shift in momentum. And this weekly RSI, I mean, if that were to happen, this weekly RSI is going to be approaching the 30s, and we'll be starting to watch for potential weekly oversold levels. So this is a clear bearish setup. The bulls still have a chance to hold support, but because we saw such a lack of follow through, no bullish reversal candlesticks confirmed, it is a testament to the strength of the bears. So even if we do get a bounce from here, essentially where it stands is the low of last week or the low of this week, whichever is lower, is the first key support, then the low of February, and the new resistance is the top of the bounce. So most names, it's the high of today. And anything under the high of today will be just another lower high. That's our new benchmark to make sure the bears are in control with lower highs continuing on the way down. Because we saw the low, the bounce attempt, we got a couple days of follow through, or actually we only got 1 day and a morning of follow through. That's our new lower high. So INDU, the Dow here, same thing. Our new resistance is 24,446, and we're looking down at the recent low of 23,553, which is very close to the February low, 23,360. So we're watching those key supports that we're approaching along with the 200-day moving average, the weekly time frame showing a lot of weakness, and if we get another leg down, the 50-week moving average will be the next support we look to on the Dow. And just comparing to SPY, 50-week moving average will be tested before we break that low from the February dump. IWM on the daily time frame, again, lack of follow through. We actually broke the low of last week with the low of today, so a little bit more weakness, but only in the past 2 days, because if we look back to the low of March, we're still holding that level. Most individual names not holding that level. So that key support is 148.06, 149.71 is the low to this point, and as long as the bulls hold that level, they do keep some control of this daily time frame. Weekly chart doesn't look anywhere near as bearish as the other names we just looked at, but if we do lose that March 2nd low of 148.04, then we will be looking at the same kind of setup, and it will just be a couple steps behind the other names, but it will definitely be bearish. So holding up overall a bit better, but obviously the bulls are not going to see any kind of follow through if the other markets are continuing to dump. And that's the thing, when we have volume and volatility so high, the correlation on all these individual names and markets really syncs up. And the last couple days is just a testament to that with all this volatility. IWM. So IWM on the weekly, just went over it. So let's go to VIX. So VIX on the daily is still trying to break the lower high pattern. 2622, 2601, and still lower highs. We didn't even break the high of yesterday at this point. The daily upper Bollinger Band, we're watching that level, but we need a clear break to higher highs on the daily to give the bulls confidence and create some space, because if we can get over these low 26s, there's some decent space to the upside, which would essentially be the markets heading down to test their February lows. So VIX on the weekly time frame, trying to shift momentum. We're coming right off the low, so we might need a higher low and then a higher high on this weekly time frame, as we are struggling in the 26s. So a lot of people ask me about Canadian MJ. I certainly cover it a lot. Not going to do its own video tonight, but definitely just wanted to talk about the sector. I have no long positions in Canadian MJ. And again, it's because of the correlation with these overall markets. Canadian MJ is about to hit its 3-month lows and test that support. This is MJ, which is an ETF of these Canadian MJ names. Let's look at the weekly time frame for it. And my point here is that these sectors, regardless of what's coming up, this is an extremely bullish sector heading into the summer and fall with legalization doors opening and the first revenues coming in for that. But we can't escape that. And what matters more is the overall market correlation, because we could very easily be bearish in the Canadian MJ sector for the next 3 months. So we have to keep that in mind. And that's why I'm remaining all cash. And if we break this MJ low, we're going to be looking down at the low of the lowest price that we've seen in quite some time. So again, 28.86, and then we're looking down at 27.81. A lot of the major players, APH, ACB, their daily charts are bearish, and they're close to some further key bear breaks. And this weakness in the market overall is having me hold off. And if I'm sitting all cash and we're pulling back in this sector, I know I'm going to get a really nice entry opportunity as we do approach summer and the doors opening for legalization. But until then, I'm going to be patiently waiting, because I know these prices are not going to turn around and skyrocket without me. And we'll take it one day at a time, as always, to see how weak this market is truly going to get. So I appreciate you watching. Continue to stay protective out there. If you are under 50 years old, you are rooting, well, maybe not 50. If you're under 40 years old, you're rooting for the market to crash, because that gives you the opportunity. Hopefully, maybe you have some capital saved up or something that you can invest, but that gives you the opportunity to enter some long-term positions. And I don't have any long-term positions right now, and I haven't in a long time, a couple years, because the market has been so strong. And I'm going to begin shopping once things get pretty brutal and once we get a lot of fear. That's when I'm going to be doing my long-term buying. So I welcome some more weakness, and I will see you tomorrow. Thanks for watching.